It's Woodford Reserve tonight, so you got to kind of take your time with it, slow down a bit. Rick Schnellman says I need to take a little time and stop and smell the roses. That's pretty insightful. I really appreciate that, my friend. I think at some point down the line, I'm probably going to owe a lot of these folks a heartfelt thank you, no doubt. I'd like to thank all the frequent subscribers to the message here to make their way into the Friday night live stream. You guys are the ones that create the core nucleus of the community, ambassadors of self-directed investing, and carving out a chunk of this opportunity. Always really foot stomping for those investors out there that may be a little bit intimidated by the markets. Anybody who's been in investing or in financial markets, they've gone through hard times like this. There's no doubt about it. I've gone through so many. It's incredible. They come and they go. A little double whammy going on right here for sure. I think this year, I think we're in for it. I think today was a nice reprieve. If you want to know my insight, take the little bit of breathing room that you have been provided today and buckle your seatbelt, right? Um, Financial markets have proven over the history of financial markets, and if you guys want any validation, there's no doubt about it. I'm just tickled to have you guys come to a small corner of the social media world and spend a few moments with me. I'm humbled. Okay, I'm just a hardworking guy. I get up every single day. I've been doing everything I can possibly do to buffer what it is that I need to do to improve upon different elements of my life that are within my control. Right now, um, the invasion, that's not in my control. Inflation rates and the price of goods and the housing market, those are the types of things that are out of my control. So what do we do about it? Do we manifest over those things that are out of our control? It's amazing to me how things don't ever just line up perfectly, right? You get involved in the stock market and boom, it goes down right away. Never goes the way that you think that it's going to do. But I was telling somebody that I know this week, I said, the worst thing that can happen sometimes to a stock market investor is you getting involved in the stock market when it's on a prolonged upswing, and it conditions people to thinking that the market only gives and it doesn't taketh away, right? I just want to put into context that take away what it means in the short term really is somewhat irrelevant. And I think all too often there's folks that um, perhaps maybe were over levered to the market. Maybe it was one of those things to where you put a lot of risk on the table, and either you're aware of the risk or you're unaware of the risk, and it pays off for you over a certain number of months. But man, when it turns negative on you, it really kicks you in the face, give you a dose of reality. I'm going to share with you guys some of my insights for those people. I'm getting some really nice reception on the live stream, and I think there's a lot of patrons that are making their way to the live stream that are catching the message, and and good on you for doing it. I think this is a few minutes well spent. I think if you want to catch some entertainment on Netflix, go watch Mandalorian or watch Boba Fett. I'm looking for a good series here to fill up some of my downtime, which is very little anymore. Projects are firing right away. Getting some interesting things going on other fronts. The portfolio, as I've been declaring to you guys, has been kind of static since early November of 2021. And I was the only one that was calling it. I would come on to every single Friday and I would tell you guys, look, I'm not buying this market, nor am I selling this market. I'm ecstatic, and for the most part, my 2021 posture was completely different than my 2020 posture. I was one of those Ozark, he says. I was a little disappointed in the latest season. Jason Bateman was phenomenal as he always is. He was actually very good. It was good. I like Ozark. It was really good. That's another one. I blow through those pretty good because that's my decompression time anyway, to pick up a little bit of that. But yeah, times are tough right now. There's no doubt. But it's one of those things to where I think that the market had about a 2-month head start on us. Yeah, I do. And this is how it transpires. If you think that somehow you're going to see all the stars aligned enough to give you the insight enough to where you can do what? Liquidate your portfolio? Some of the talking heads that we talk about. I saw the debate between Chris and Kevin. And you know what's interesting, and you guys want to know the truth of it. I have a lot of respect for Kevin. I really do. He's a really smart guy. There was a few insightful things that he said that actually kind of concerns me a little bit, in that how much time he devotes to his craft. And I certainly respect his work ethic. There's no doubt about it. But there's a flip side to that where I kind of felt like there was a lack of balance being struck. You're already a winner, right? I mean, he needs to strike a middle ground or even more of a conservative approach and just teach people that his channel is fine. It's not going anywhere. It's net. Once you get to that established level, all you really need to do is buy into the tried and true fundamentals that I'm going to go over, and I'm right. It's just that simple. And I always say when people come on and they profess to have all the answers in stock market investing, to shut it off. Do whatever you can do to run away. Um, I don't approach this gig that way. I know what works in this, and I see different examples of people being shunned off of the market because they break a very simple rule of mine, amongst many. And in those cases, they're just overexposed. They don't seek out diversification. And if you're going to hold a 12 stock portfolio and you think that you've got it dialed in with the growth metrics and those metrics are just going to pay off indefinitely, that's wonderful. Hell, you can beat the market. You can beat the market for a year. You can beat the market for 2 years. Hell, you can string together 3 years beating the market. But something funny happens, man, during times like this where those roll off. Your beating of the market the previous 3 years is gone. It's gone because you failed to recognize that beating the market is one thing, but protecting, right, what it is to the downside is the other flip side of the coin that people forget all the time, you know? And if you can just match the market, right, go after that annual compounding growth going forward, that's really the key in taking more of a defensive posture toward your access to the market. How do we do that? We're going to discuss that in this video. I'm just going to make this a little bit more positive than the last few weeks. I've been talking about the stock market crash, and I've got the core group in here, and I just love you guys to death. I really appreciate the support. I wouldn't miss it for the world. I love coming on and talking about it. We will be releasing the Highly On video on Sunday. So certainly you're welcome to throw whatever questions you want in the gallery. I was making quesadillas last night, listening to the earnings call and giving a couple fist bumps on a couple of things that I heard. Thomas got a fist bump when I heard shareholder value for the first time. I don't know if he got that from me, but for you guys that have been hearing me foot stomp, the importance of acknowledging how important it is to at least acknowledge those retail investors and the investing community at large, who have been on quite a ride. But for you guys that missed that call and are interested in an emerging company that's making waves, by all means, take 46 minutes of your time. The latter half of the call, it was the largest Q&A that we've went through on the Highly On earnings. They beat again. They reported revenue for the first time. Expected revenue very lean this year, not immaterial, but 2 to 3 million on the hybrid unit as they're looking to finalize step up in the Hypertruck ERX. But striking balance, no doubt about it. Volatility, geopolitical risk going on right now. Not to speak a whole lot of specifics. Inflation obviously takes a backseat when people are potentially, losing their lives and being displaced from their home. It's not a perfect world we live in. There's no doubt about it. And the very opportunity that we seek out through stock market investing, we could all be so lucky to enjoy financial markets in the way that we do, and to take a little bit of a pause every now and then, because I think all too often in volatile markets like this, we all get caught up in, the day-to-day checking. Yes, of course, it's down again, and I think it's incumbent upon all of us as investors, and I do provide a calming voice. I'm really calm. I don't get fired up through times like this. Not necessarily the dollars fluctuating up and down that bothers me at all. It's the plan specifically. And for the last 6 months, I've been intimately scrutinizing and over scrutinizing the due diligence, which is complete on Hyliion. Now it's just a monitoring and an evolution as the company evolves, and this. But 6 months, I've been really scrutinizing the company, because for me, I just need some assurance that the company is pointed in the right direction. And up until the last call, going into those earnings call, and I don't know if Rick would agree with me. I don't think Rick ever gets down. He's seemingly always right there in the pocket. He's got about 6 times the position that I've got in the company, which isn't anything to shake a stick at either. Where the position's a millionaire maker, there's no doubt about it, but it's pales in comparison. But it just speaks to the level of risk tolerance that a gentleman like Rick offers to the group, and I really want to thank him with all sincerity, for kind of leading the charge here and being that voice in volatile times, because there was a little bit of a phase there where I was kind of asking the scary question: Are they going to make it? Yeah, and when you're asking those types of questions, on a company where I feel wholeheartedly that the world is better off with it, and with all the team and with all the pedigree and with all the opportunity coming public through the SPAC process, you want to see them. You want to see them succeed. You want to believe that it's possible that new technology can stand a chance. There's some interesting commentary out right now on the fate of hypergrowth right now, and the majority of it in markets like this, they don't succeed. They stand the best chance of succeeding in markets that are conducive to those companies that are stepping into an environment that are conducive to those types of scenarios. Okay, this is not a market like that. This is a market that will eat you up and chew you up. Palantir, I swung traded this week. I made a fortune. I made 10% a day on Palantir. Palantir is my number one conviction buy. Their involvement in their government contracts is very attractive. The problem, I guess, that I have, not with Palantir, is but from a portfolio perspective. I entered into hyper growth on companies that I had conviction on, and they've all rolled off. I mean, anybody that's involved in anything small cap related right now can attest to that. It's been just really vicious. It's been sell the market, ask questions later. There's been really great companies that have been caught up in the sell off for sure. It's been a violent sell off, and entered into the correction territory. I usually buy at 10% down. That's kind of a rule of thumb for me. I'm not buying in large, aggressive chunks here. I did and have been saving to cash for the betterment of 3 or 4 years. So, and I'm going to continue to hold that cash hoard. Relative to the portfolio, about $500,000, about 50,000 or more is sitting on the sideline in cash, so nothing too crazy, but nothing to shake a stick at. In other words, it kind of speaks to myself not really looking at being over levered in this market, at least where it's evolved to over the last. Oh, I mean, 12 years. I mean, we're in a 12-year bear market, just as of, like, excuse me, a 12-year bull market. And, aside from a couple of hiccups, I think it's incumbent during these markets. I think we have more potential this time with the inflation risk as we go into latter 2022 to really kind of be a headwind for the markets. Do I think we're going to have some catastrophic, recession or depression of sort? Anything is possible. I think we're overdue for a correction of that magnitude if we do enter into a 20 plus percentage of down and enter into a bear market. I think we're overdue. I do not see that happening. That's my thesis. Irrespective of what I think, I'm kind of being a lot more close to the vest because I'm shaping up for something that could be a little bit more prolonged in the markets. And I think it's going to call into deploying of traditional methods of just dollar cost averaging the markets. I monitor the markets all the time, guys, and I don't see really, I mean, there's opportunities that I see when I go to the gym at 5 and the market's down 800. I mean, we went to war this week. I woke up and I was like, well, there it is. We've invaded, the invasion has started. Pre-market was down 800. Now we did a rolling reversal that day. Ended up in the markets. It was just insane. And that would have been a day down 800 points that I would have bought the market 100% of the time. I just got busy. I was busy during the morning, busy in the afternoon, and just didn't have a chance to enter the markets. Looked at it and said, I missed my short window. That's totally fine. There will be others. When you're looking at the market in this volatile of times, you kind of have to look at those opportunities and be very realistic. The time to buy would have been beginning of the week, whereas over the last couple of days, the portfolio's up. Shoot, I think I put a $15,000 bill just back into the portfolio in the last couple of days. Which was again a nice opportunity to take a little breather, put your seatbelt on, reassess. I'm focused in on business. I'm focused in on the side hustle. I'm focused in on my work, and thankful for it. I don't know how you folks do it. If there's folks out there that just rely on the stock market holistically for your living, you're better than me. I don't know how people do it. I think the stock market for me supplements my life, and that's where I'm going to keep it. It certainly is not. It's a big chunk of my life. It's an affinity and a passion of mine. Anybody who tunes into my message knows that. But keep it in a box, and I think that can be, I think that can resonate with the masses who are looking to make sense of this and say, goodness, I know how important it is to invest, but man, this is crazy, Ryan. Like what the hell is going on? I mean, this is insane. I'd rather just keep my money on the side, and I think there's merit to all of it. I really do. I talk to people all the time who are looking to start investing, and they're so gun shy to start investing that they build such a cash hoard because they're kind of afraid of themselves being their own worst enemy, in segueing some of those dollars into an investment vehicle to go after that capital appreciation or that dividend appreciation, whatever it is that you're seeking. But it's one of those things to where I contend that you can do both, and I'm an advocate of what I preach. There's no doubt about it. I rolled out the Vanguard's passive account this week, and for anybody that caught that video, you could see how well it held up in volatile markets. It's just insane. And, for the amount of sleep that you can save and for the amount of time that you can save devoted to financial markets, you can focus in on the things that are important in life: diet, food, health, and well-being, spiritual well-being, family, maybe a side hustle or a sport, or maybe even that you're busy, making that living. The statistic that was the most of interest to me over the last week that I picked up on is that there were a record number of millionaires, not made by cryptocurrency, not made by NFTs, not even close. The most millionaires were made, and it was a huge increase. Number one, through the TSP, there was a 33% increase of millionaires made by nature of TSP investing. The irony is that the majority of those investors made a nominal salary, a salary that, required them to budget. It required them to save. It required them to pay attention to where their plan was and where their loyalties lied. And the second was 401k millionaires. Record numbers being turned out from people that were just passively investing the markets. So, I only say that, and I did give my proper credence to Meet Kevin, and I will pick on him a little bit in that, for the millions of followers that follow that message and perhaps maybe followed his lead, and sold everything. There would have been a time over the time when he said to sell, and today that you would have been right, right? You would have been like, oh my goodness, this is incredible. Meet Kevin told me to sell, and boom, the market's down $1,000. This is incredible. I'm buying his course. I mean, he's going to save me thousands of dollars over and over again. And Kyle says he's buying back. Has to, because you end up kind of getting trapped in this little deal here where the market, boom, it shoots up. The Dow's up 1,300 points over the last couple of days. And that's I don't wish that upon anybody. I don't. Look, I don't care. I don't care if you're a Kyle with passive income investor or a Jeremy with financial. I don't care. Meet Kevin. I want those guys to all succeed. I don't care. They're already there. My problem isn't necessarily what they do with their own portfolios. It's the influence that you potentially have on others. And I'm just here to tell you the truth. And the truth is, listen up. Trying to time the market and sell everything, even with the rationale, and he does his homework. I heard his rationale. He was right on in his rationale. Being right on in your rationale does not mean you're going to be right on in the stock market. And this is what I talk about all the time. If you're going to try that feudal game, it will humble you to your knees. It will prove you're wrong every time. And you can look at me and say, how the hell is that possible, Ryan? It can only do one of two things. It's just amazing how often the stock market will do one thing and then the other, and then jump back and forth so many times that it's futile to try to follow it. And it'll leave you on the dirty side of a trade if you're looking to time the market and go in and out of the market, right? So the solution is very simple. It's very simple. Just buy and hold the market. I sleep easy. And you guys have to understand that the baseline of my portfolio is comprised of TSP wealth, and it's comprised of passive wealth. Look, if we're making millionaires in the masses, and we're talking about tens of thousands of people, guys, tens of thousands of people that have a common thread, not to be pursuing the next best thing on YouTube. These are working class people, right? Kyle does print. These are working class people that are working everyday jobs, So you look at that and say, well, I don't really work an everyday job. I've got a little bit better than average. I think I've got a little bit of surplus capital. Where does your alliance lie? And I'm not going to make those decisions for you. I'm just going to tell you how the facts shake out. And the facts are overwhelming. Invest for the long term. Do you need the money? The answer is no. Right? We all can sit here and go, no, but we're good, Ryan. I don't need the money. The very thing that you do during volatile times is you start looking at that money and you're like, man, it sure has, it sure has rolled off pretty good, We start playing these mind games with ourselves, and it is futile. You got to kind of let it go. Allow invested capital to work. Allow invested capital to act like invested capital, and do not be surprised when it does. You'll be so much better off. Look, man, draw a line from now until some point in your future, i.e., your retirement date. And don't pay any attention to the line that's drawn between those 2 points. If you can do that, you have absolutely gravitated to a better place in your investing application, and you will absolutely set yourself up for the greatest renderings down the line into your future, guys. I'll be with you back in just a second. How to win, I'm going to fire away at you right now. How to win, stay the course. Okay, stay the course. I can say it in a number of different ways. I teach upon this. You might say, well, I need the 3 stocks that you recommend to help me get to that end. You got to take a step back, shut up, listen for 2 seconds, and to stay the course. All right. Stay the course. Don't get caught up in the intermediary ups and downs in the market. Okay. If it goes down, buy the market. Okay. Or just stay the course. You don't always have to be acting or reacting on the market. All right. Take a defensive posture in the market. Okay. This is hard for a lot of people to do because a lot of people look at it on the onset and say 8 to 10%. That's pennies, Ryan. I can do so much better. You're missing out on the compounding effect over your money, going for a nice year over year average, at least on a good bulk of your money. It doesn't mean that after you've learned yourself up on the power of compounding interest over time, that you can't expand your application and go after some dividend growth, maybe some growth investing. That's no problem. I'm not going to discriminate. There's all kinds of ways to make money in the market. I'm not going to tell you you can't make money. What I'm saying is the masses fall into the category of preliminary diversified passive investing to start. Okay, give yourself a fighting chance. All right. If you've bought the half a dozen growth stocks that have been dominating and you come out of the SPAC era, which is just really, it's really taken a lot of people for a ride, and you were ill prepared for that type of reality check, it probably skinned you. And it probably burned you so bad that you never want to return to financial markets again. Okay. Don't overexpose. All right. If you've got $10,000 to invest, take 500. If you're real hungry to get started in investing and you're like, Ryan, I got it. I'm good. I'm good. I don't need any more pep talks. Leave me alone. I'm good. Heffy, I'm good. Go open the safe. Get that 10,000 and put that 2,500 to work. But put a little dab in the savings account, man. It's nothing going to hurt you. Have that buffer there, that little bit of an extra sleep easy cushion. It does nothing but lose money over time to inflation, yada yada yada. Ryan, you're a complete moron. Money does nothing to you. Listen, if you're a Matt Money, Matt's I've known Matt a long time. Matt's got the experience and the risk tolerance enough to expose himself. Excuse me, Matt, not expose himself. Expose his dollars to the stock market as in a manner that's a little bit more aggressive than the average bear. Okay. You can't handle that. All right. This is the live and raw piece. You can't handle it. A lot of people will say, yes, I can, Ryan. I can handle it. No, you can't. I'm talking to you too. All right. I know Matt can handle it. All right. Matt's one of the best investors on YouTube. Okay. So listen up and just kind of try to define those parameters. And if you're going to define your parameters and you don't know where you fall along that spectrum, give yourself a fighting chance and start with a little bit of a defensive approach and don't overexpose to the market. That's, I watch Meet Kevin and I understand he's taken an exuberant amount of risk. And I say, well, the guy's a multimillionaire. I think he's got 25, 30 million anyway. He's done quite well for himself. And he's a go-getter, man. He really is. I've liked Kevin ever since he started his YouTube channel. Entertaining. I remember the old Grant Cardone videos. Those were classic. I mean, just classic. Those were like free little mini movies, production movies. They were awesome. And I'm all about tipping my hat to success. I really am. But, over the last couple of years anyway, I think it's been the fashionable approach to just drive home that whole like the next best the theme stocks, the hey, everybody's stuck inside, so therefore everybody and their mother's going to have a Peloton, you know that type of thing. It eventually cools off. And if nothing else, over the last couple months, we've had a reality check to show that those a lot of those hyper growth stocks have really rolled off. Want to make sure in Wealth Preserve, Chris Blaine has talked about a little bit, approaching that retirement age, putting a little bit aside in the bond portfolio. I've already started mine. I'm going to display them for you too, but I'm giving you guys the lesson rapid fire tonight because I made a few notes, gained some perspective. Okay. It's just investing. All right. Chill out. Chill out. All right. If you need to get yourself some Woodford, go ahead. It's all good. All right. If you need me to send you a bottle, I will. Okay. Do what you got to do. All right. Exercise more. Eat healthy. Do something good for yourself. All right. I become a coach. It's fantastic. It's just incredible for me. It's a wonderful release. Get involved, man. Life is good. Life is short. It's a wonderful, wonderful thing. Rick says I need to enjoy more. What's interesting with me is for everything that I've been through in my life, guys like me, um, things taste better for guys like me. hmm Because I have an appreciation and an affinity for life that um, I try to share as much as I can with people. I really do. I try to give it to people when I find that maybe they're hurting a little bit or they're down a little bit or Ryan, I don't get this or hey, I've got these other things. And it doesn't have anything to do with the stock market, but the stock market is just exacerbating those things beyond the point of tolerance, right? We need to talk those things down a little bit, walk them back a little bit, and understand, man, that the greatest things that we've got going on in our lives are the things that we have in front of us, the things that we're striving for. Don't you ever notice that when the volatile markets are volatile and you look at them on the real time and you're like, damn, that sucks. But then you hold true on the program and maybe you have a day like today, vindication, I don't know, for a lack of better terms. And you're like, gosh, Ryan's right. And some of the other cats that talk about longer term investing, I caught Peter Lynch this week. Every now and then, see, Peter Lynch is like medicine to me because a lot of my philosophies I speak about when I talk about, you know, the 50 downturns in stock market history, and X number of those have been 10%, X number of those have been 20% into bear market territory. Another handful have been depressions over the history, and the stock market has always recovered. It has a 100% recovery rate. And the irony in each of those downturns is that the investors that won out every single time are those that hold true on those investments. It's just that simple. And I know it's not that simple for a lot of people. And I don't mean to simplify investing because I think there's a misconception that investing is easy. Investing is hard. Okay. Investing's hard. And it's only for the people that are mentally prepared enough to take on this opportunity and win at it. When I prepare people to enter into stock market investing, I don't prepare them to do anything other than have that armor to go into stock market investing because it's hard. If it were easy, I would just say, look, buy my course and you don't need any extra instruction to succeed. That's just not the truth. That's just not the truth. You know that the vast majority of people who buy courses never actually open up page one of the course. Those statistics are available on all of the course making software. People, it doesn't matter the amount they pay. It doesn't matter. They pay $500 and they think by nature of paying the $500 that's automatically going to increase their eligibility for success in the market. And they never, ever even look at the course itself. The statistics back me up on that, guys. It's true. So what gives? I want to differentiate that the market is hard, but it is not impossible. Okay. There's a big differentiator between being hard or being difficult and being impossible. All right. Earn experience. You're not going to get anywhere in stock market investing unless you are willing to take that leap of faith and start logging those days and logging those weeks and logging those months. If the stock market is brutal for you over the course of a month and over the course of 6 months and over the course of a year and over the course of 2 years and 5 years and 10 years, right? The reason why I put that example out there is because the further you get away from your starting point, the more your odds of success go up. They do. And you have that opportunity to call yourself an investor after having logged 6 months and say, gosh, even just in the short term, man, I'm kind of good to go. I've got this thing kind of licked a little bit, right? Give yourself that fighting chance. You want to build the cash. These are ways to win, build the cash. Okay. The schools of thought would disagree with me on that. And I get it. I know all the arguments. It's fine. I share with you what I do, whatever. If you don't want to do that, you just have to make sure that you have the tolerance enough to accept that level. And then how to win. Honestly, you guys are going to have to diversify across your life, not diversify across your portfolio. Sleep, eat well, and exercise. I was up every single day this week at 0500. And you might be saying, that's awesome, Ryan. You're great. I was there too. Well, you know how many people were in the gym with me at 5 o'clock every single morning this week? Zero. And I know that's probably a small representation sample, right? I'm sure that there's people all over the world that are just in the gym killing it at 5 o'clock in the morning, right? Today I double dipped. I was in the gym at 5 this morning, then I went for a 3 mile run before the live stream, and I feel like I can deliver a better product when I do that. Find that balance, man. Can exercise and eating right and watching your diet and things like that, can that make you a better investor? Absolutely. Absolutely. If you think that somehow you're going to think your way to risk tolerance, you are going to be sorely mistaken, man. You have got to define yourself to operate like a Ferrari. All right. If you want to continue to operate like a Pinto, then that's your choice. But if you're going to operate like a Ferrari, you better treat yourself like one. Okay. Because there's no doubt about it. Stock market investing is hard. You've got to condition your mind to make sure that you can deal with all of the volatility out there. All right. In stock market investing specifically, I talked about ways to win. You want to align your personal strategy. Okay. There's not one strategy in this group that is exactly the same as the other. There are common threads and common traits amongst each of the investors that are in the empowered independent investor community. Okay, but making sure to always strive to evolve to that personalized, tailored portfolio that makes sense for you. And I'm talking about the holdings and the dollar amount. Okay, the holdings are pretty easy, but the allocation, making sure that we're starting from a defensive posture, going from zero to something, right, makes sense to give you that fighting chance, establishing that DCA schedule, that dollar cost average schedule. So you're continuing the injects to the market over time. Super important. All right. Diversification, I've already mentioned. Um, Find your passion. That's a key. That can really help take your mind away from stock market investing. If you're looking to augment your life with the power of financial wealth building, you really do need to find that passion. And I'm a big advocate for keeping your day job. I'm not one of those guys, and maybe I'm wrong. Maybe I am selling out to the man. I don't know. I don't really care, because before I got into my current profession, it was the one thing that I wished for, some stability, because I figured if I had stability, I knew the mathematics in my head were right there to be one of those millionaires down the line, whether it be the TSP or the 401k or an individual Roth of sort. Okay. Stay long and have relative perspective on this deal is very, very simple. The strategies that are proven to work for anybody that's catching this that isn't part of my core group and has heard me say this time in and time out, it's worth foot stomping over and over again, because I'll say it 1,000 times, and it's the 1,001st time that I say it that somebody actually picks up on it and says, "Gosh, Ryan really talks about this passive investing quite often," and I do. A lot of my wealth is accumulating wealth during the market time. I don't touch that stuff. A lot of the ETFs that I own, that I'm going to demonstrate here for you shortly, then we'll get to some questions. That's the big foundation for my wealth, and it's been built up over time. And you can do it too. Anybody can do it. You have to start. You have to be brave enough to take that start and build up that to passive investing. Dollar cost average your passive investing strategy, something that you can control, right? I can't control inflation. I can't. I can't control what other countries are doing to other countries. I can't control that. What I can control is my DCA schedule, right? My dollar cost average. I can control my pursuit of diversification across to my portfolio. I got into an interesting discussion this week, and I know there's schools of thought that would disagree with me. What's new? It's totally fine. You cannot own single stock and be diversified. Okay. It doesn't work that way. The only way to seek out true diversification is to own broad markets, whether it be mid caps, small caps, large caps. that type of thing, or by indices, whether or not you're buying the S&P 500, maybe the NASDAQ, maybe you're buying foreign markets, emerging markets, etc. If you don't have a basket of a few hundred stocks on the low end and a few thousand stocks on the high end, like Vanguard's total market has around 4,000 stocks in it, right, which represents the total US domestic stock market. That, in fact, is diversified. But if you own an 80 stock portfolio like I own, and you come on and you say, I like that, I want to put all my eggs in that basket, you would be doing it wrong. Okay. And I know there's people out there that would just disagree with me up and down. No problem, Ryan. I can research the 30 stocks that are going to beat the market indefinitely. No, you're not. You're just not. I'm sorry to tell you, you will not. And I don't care how good you think you are. I don't care how much you yell and scream at me. It's no problem. Okay. I will dare to be wrong on this. Okay. And I will say, look, I'll tip my hat if you're right, but you will not be. Okay. You won't. Now, I'm not saying don't own single stock, but keep it in its own bucket, right? Monitor that bucket exclusively, because if you start monitoring that bucket when the market is up and failing to acknowledge that bucket when the market's down, and that passive investing is off 4%, but your single stock portfolio is off 18%, guys, I mean, you're kind of ruining yourself there. Now, I have both, and I don't cross compare. I don't say, oh my goodness, I'm giving up the performance or the lack of underperformance in the market by owning single stock, because I'm getting paid the dividend income over here. I'm fine with that. It's totally fine. I'm building wealth in a majority of categories. I'm totally fine with that. And you want to eliminate the fees in your portfolio. Okay, very, very simple. I just threw the goods out there. I really wanted to come across with a little more of a positive message tonight, because I think over the last 3 or 4 weeks, it's great. People love it when I talk about the stock markets being obliterated, and the world is coming to an end, and everything's going to zero. People love that stuff. I have no idea why. I don't. I don't like it. Um, I play into it from the angle of, look, you've got to recognize that none of that stuff is true. So when you have all that propaganda coming out, you notice how all the news right now is bad? All of it. I told you. I told you they would take all the skeletons out of the closet last year when everything was good. The national debt, no problem. Printing money, no problem. Issuing free money to people, no problem. Forbearance rolling off fall of last year, no problem. People not wanting to work, no problem, right? Real estate market is at an all-time high. You have to pay $500,000 to get into a house in anywhere that's, respectable, in suburbia in the United States of America right now. Yeah, that affects things. All right. So let's jump into the portfolios really quick, guys. I'll run through it quickly, then I'll get to the questions. I do want to acknowledge some folks. I've been looking with one of my eyes. Whoop, whoop, whoop. One of my eyes have been looking, and I see a lot of folks in here, man. And I do want to talk to you guys. So here's the brokerage account up over. It's at 70,000. It is up week over week. Nothing crazy has changed here. Nothing crazy to report. The portfolio has just been static, and it's been working really against itself. I entered into, I swung traded large growth, Amazon, Google, specifically, CRM, but they've all rolled off quite heavily. It's no problem. I don't mind taking the stocks into a downturn. It's no problem. Wonderful companies. I'm not going anywhere. This is Roth 1. Nothing here crazy to report here. We are up week over week again. So 2 for 2, not bad. Had I sold everything, I would have said, but buy my course, right? Like the first time when the market was going down, buy my course. Everybody's like, yeah, this throwing credit cards at YouTube. God, I gotta get out of my way, man. I gotta get this guy's course before it sells out. Talk about making something more difficult than it needs to be. That falls squarely in that category. Roth 2, I think we're up week over week in this as well. Doing a little recovery in this, a little bit of build back. Took some phenomenal profit in ExxonMobil. But nothing to shake a stick at. And you look at this, what's been the range that I've declared to you guys over the last, let's say, year? This portfolio has been up to 120, 122, maybe down to 92. In the long scheme of things, what's the difference? To the untrained eye, people would look at this and say, God, Ryan, you're crazy. You could have taken the $38,000 and bought, I don't know, 500 big screen TVs with it. I don't know what I would do with 500 big screen TVs. I don't know. But there's no place I would rather be than right here. No place. I've already done my justification. I did it a long, long time ago when I was a wee lad, 15 years, and investing's made all the difference. 17 years ago, I started this very account with $1,500. So go figure. Could you have this $92,000 portfolio after 15, 16, 17 years? No, you'd probably do better than me. Just depends. I've done nothing special. I've gone through downturns. I've gone through volatility in the stock market. It happens. I think this one I started with 1,500 as well. So both of these, right? There's $200,000 worth of wealth here, over 200 grand, built up from $1,500. That's a fact, Jack. All right. When I dip, you dip, we dip. All right. It's just that simple. All right. It's a little portfolio. This is awesome. This is up. This is holding in fabulous. I just love this portfolio. It's absolutely wonderful. It demonstrates the power of diversification. I haven't been dollar cost averaging these. I had my business income just from YouTube flowing into this for a while. Now I've got it flowing into the business account, so a little bit different. So I need to stand this up, and I should do it. I'm just not in a rush, and it's a bucket, and I have 20 buckets, and with all due respect, that's a lot of buckets. So I just haven't got around to it. I've been busy. I've been trying to work on some promotional content for the side hustle. You guys caught my CEO interview with Stuart Lother this week. That was awesome. Thank you to you guys that caught that. A lot of fun. Stuart's a great guy, doing some cool stuff. What a treat for me to sit down with CEOs and rock it out. But just shy of 20 in here. Nothing crazy. Nothing. This isn't enormous. I'm not Meet Kevin. I don't have 35 million. This is probably indicative of maybe what somebody has, or somebody has a lot more than me, or what somebody could strive for. But that's what I want. I want people to sit across and say, man, I can do that too. And you certainly can. Here's the dividend portfolio, just shy of 30,000. This is the one that I told you just is comprised of the dividend payers. The bond account, this is easy money. It's up every week. I fund this with about 50 bucks a week. Most of the reason why it's up week over week, to be honest with you, is because I'm funding it with 50 bucks a week. This is a bond portfolio, rarely ever goes down. But it has rolled off a bit. The TSP didn't have a chance to calibrate, but I'm quite certain that the Dow up 850 today would have pushed this to an up week over week. But I'm declaring to you guys that it did not calibrate. So according to the TSP, this was down week over week, but I'm sure that will calibrate. Okay. The Vanguard's growth, that's up. Vanguard's mid caps, that is up week over week. Globex is finding its footing here. They're taking care of some internal things that I can't disclose through a live stream. I won't, but exciting things in 2022. This is going to be an awesome company to follow their progress. Cryptocurrency, a waste of time. And here the total portfolio there, $4.64. So I don't know why the hell you guys follow me. I have no idea. Not too shabby, but in 25 years of investing, we've been able to garner a few pennies. Yeah, I save about 1.5 cents a year over the last 25 years, and there it is, $4.65. Probably better than the average bear. Anyway, I don't know. I don't care. I don't really put a whole lot of stock in this, no pun intended. However, it does give me a slight level of validation as somebody that's halfway to a mark of millionaire status on a salary that's never rendered me close to six figures. Yeah. So it's the degree of separation that defines the level of success that you'll have in financial markets between what it is that you earn, what it is society puts on you, predestined to end up someday, and your ability to, by nature of your free will, accelerate that path to something extremely, extremely special. And there's people doing it in this group. There's no doubt about it. There will be people that will be accelerating their wealth into the future, that would have never had the chance to do that had they not come to the message and found a little bit of inspiration and found that right spark for themselves. See, that's the thing, is everybody has the ability, everybody has the aptitude. They might not think it, but they do. They do, because the right stuff in investing is not the stuff that I hear all the time from inexperienced investors wanting to enter into financial markets that think they've got A, B, and C licked as to why they can't invest or what they need to do. None of those are true. I can counter usually all of those things when investors come and they're like, well, investing's like gambling. And what I need to do is I need to pick three stocks that are really going to give me that start. And I need to do so in a taxable account. People always have this idea, and it's like, well, think about these things over here. There's a multitude of different options for you out there. But let me jump in here, man. This the gallery, man. He says I sleep well at night, for sure. Now, life's a gift, man. I operate at a different speed, guys. You catch my energy when you come into the live stream. I'm like that a lot of the time. I really am. I'm ferocious at work. I love my job. I do it with passion. I have a small amount in stable coins. Yeah, no, I didn't mean to rip through that in disrespect, but it is everything that I thought it to be, and then some. It's just, it's kind of a waste. I really wish I just should have taken that and invested it into what I know. Always invest in what you know, and I, I don't get it. I don't get it, but we'll see how it shakes out, man. You comfortable? What more is there? Yeah, I'm okay. The Lum's Ryan crypto review. Yeah, I mean, it is what it is. I'm a little cranky. I invested in Bitcoin. It jammed up to 50, 60,000, and I was whole hog. I doubled my portfolio up to 5,000. And then I invested in Shiba Inu just for fun. Lost it all. Now I'm back down to even again. I'm $2 shy of even. I don't understand what the point is. I really like Charlie Munger and Warren Buffett's summary of crypto. You really just have to invest in it and then hope to sell it to the next schmuck for a higher price. That's the best analogy of crypto that I've heard so far. Matt says our bucket for sure. It's great to see you, Matty. I hope you don't mind the shout outs. Well, they were shout outs and compliments, man. I've got the utmost respect for this guy. He really does. He's a kingpin. He received some comments actually indirectly through me this week through my WhatsApp group, and I was like, "Who's this guy posting this stuff?" It really helped me a lot. So I think that indirect impact is very, very powerful, and I know Matt's good for it. I would put that guy in front of anybody. That's one of the best compliments that I can ever pay somebody. And Kyle's in the house, man. It's great to see you, my friend. Thanks for making your way in. I know you're a busy family, man. I hope it all is well with you and the family. It's great to see you. Kyle's, VIP in the family here, and what a hell of a network of people we've got here. Kyle represents that hardworking family man, ripping. If you're not subscribed to his channel, man, kick over, help him out, build the message. There's no doubt about it. YouTube's taking away as many bots from my channel as I'm gaining subscribers right now. It's no problem. I'm not going anywhere. I think the cool part about it is if I could earn people's subscription by just telling them that I will be here in 20 years, and most people are like, yeah, sure, Ryan, right, whatever. Try me. Try me. Try me. We'll see. It says 20 buckets. Yeah, it is. 20 buckets. Everybody wants to see. Oh, I'm pretty open and honest with all of them. No doubt about it. I've got three with M1 Finance alone. That's the Vanguard Sector Specialty Portfolio, the 80 stock dividend portfolio, and finally the bond portfolio. We've got the kids 529s. We've got the kids UGMAs. That's 2 and 2. I've got 4 business accounts. I've got the taxable Roth, taxable brokerage account, 2 Roth IRAs, the Webull account, the Robinhood account, the Charles Schwab account, the iTrust Capital account, and a partridge in a pear tree. That was probably about 20. 20 buckets, he says. Yep. I dip, you dip, we dip. All right. That's right. That's right. Come in and get a little entertainment from the Independent Investor channel. This is why it's the fastest 60 minutes on YouTube. Seemed like I just started 5 minutes ago. I've got 5 minutes left. I wish I could get into a house for 500. Yeah, no, $500. Yeah, I don't know if they sell yurts anymore for $500. I think you could probably buy a tarp and an axe and make something for $500 anymore. But yeah, no, it just seems like everything I'm seeing is right at about the 500,000 mark. And I won't play ball. I'm good. I know the value of property way too much to be buying into this frenzy. I won't play ball. I'm good to go. Scanning up through here. You're gonna catch up to me. Who, me? I'm not catching up to you. No way. You've got a way bigger portfolio and a bigger infusion. He's not talking to me. But I think Matt would agree. I don't want to speak for him, but a lot of the success that I've been able to garner has been my ability to fall back on a stable career. Yeah, I think it would be unfair to not acknowledge that. And I see that in Matt. I would let him admit to that or not, as far as what he feels like the contributor to building the portfolio. He aggressively funds his portfolio too, to his credit, beyond the average bear. You want to contribute 35% of your income. Well, okay, then you can start to talk and have the renderings of a map money. Yep. But, it just speaks to the level of motivation. How much do you have? You got to define it for yourself. Matt doesn't have to come on and share it, nor do I, or nor does anybody else in this community. But, I think the misconception is that retail investors can't make it on their own. That's a bunch of baloney. You certainly can. It's all good. Rebecca's in the house. I'm getting there. Hit 650. Yes, you did. I remember. It was the live stream when you came in and told me. See, I remember milestones like that, man, and well earned. And for those blue collar workers out there that are working hard, going to work every day, those little bits, man, they add up. They really do. It's a big deal. And you represent more by coming on and sharing a story like that, than just yourself. You represent it for people who look at you and look at this person who's commenting and say, man alive. And if you knew her, you would know that she's a hard worker. And people out there are like, I'm a hard worker too. Can I do it? And the answer is yes. And I thank Becky for coming on and sharing her story as well. It's pretty awesome. Thank you, Rebecca, for doing that. Appreciate it. All right. Justin's in the house. Appreciate seeing you, Proper. Awesome, man. It's great to see you. Thanks for all the support, man. I think Proper 19 is like #1 commenter on every single one of my videos, man. It's just super solid, super solid. All good. All good is like in the cornerstone capital solutions philosophy of life, liberty, and the pursuit of everything good in life. All good holds down a corner in the community. There's just no doubt about it. And a very important one at that. All right. Got Thumper. I've started going to the gym. Fantastic. After lunch would be a little tough for me. I was getting tired in the afternoon, so I started the morning. Liberating. Start it. You won't kill yourself. You'll be like, oh my God, I can't do it, Ryan. So you can. You can. And you'll look forward to it, man. It's amazing. Excuse me. And once it's done, it's done. You got all that time for the rest of the day, to go ahead and rip your stuff out here. I'm going to go an extra 5-10 minutes, guys. I ran out of time tonight. I really want to get through some of these comments here and have the opportunity to close down the live stream. So do a little bit of bonus time. If you guys don't mind, I'd really appreciate that. Investing is not hard. It just kind of depends, Saul. I do know where you're coming from. It's just I have to be kind of careful when I say stuff like that, because I don't want people to look at it and say, well, if it's easy, then it's easy across the board. Okay. And you go on to state, get an index fund or ETF, right? I think anybody can do that. And then it really puts in a box, passive investing puts in a box the things that you'll need to do to succeed. Okay. Once they're in place, you're already saving on the cost, right? you have either set up or you're going to set up a dollar cost average schedule, and then you become passive in nature. It goes up, great. If it goes down, you can buy more. Very, very simple philosophy. I do like that. Thank you for that comment. Set a quarterly target, say 3%, then in the next quarter, sell the. Sure, I think selling on the onset is probably futile. I think new investors really just need to get up to that 10,000 bucks as quickly as they can. But that's really solid. I just have to remember, when I've got people sitting across from me in an audience of, quite a few, and they sit across and they're like, well, Ryan says investing's easy. The unfortunate part about that is people hear what they want to hear, and that means if I just buy hyper growth, then it must be easy, and that's the part of it, and that's the active investing side of the house. You get to split those two philosophies. I think the majority of people should be passive investing and not even messing on the active side of the house. But for those minds that want to take it to the next level, which it is, go ahead. You can make really good money doing it. I have. Appreciate you stopping by, Saul. Very good comment. I really appreciate it. I do know exactly where you're coming from, and I do agree with you. That's awesome. Very good. Financial options. Here it is. When I first started in the stock market, my account lost 10% as the market went down. Glad I stuck with it and didn't panic. I said that that's probably one of the best things that can happen to an investor, because you're like, you know what? It went down. Okay, woe is me. I don't understand what's going on, but everybody tells me to stay the course. I'm not going to panic out. I'm going to stay the course on this deal, and I'm going to make it a right. For those people that do that, and they validate, those are the lessons that you can't get through a course. You can't even get through the independent investor channel, even though I've just elegantly walked you through the scenario. And financial options with Thumper has done the same, and people need to experience it for themselves. That's the true value of it, and that's really the only way that people do find that true value in the market anyway. All right. Buying the course and never looking at it is like buying an exercise machine. 99% of people who buy exercise machines use it once. That is a fact, Jack. Yep. 99%. Can you believe that? Isn't that insane? 99%. I'm over in the gym every single day, and I don't own a piece of equipment in my apartment. I walk across the street to the gym. It's free of charge. It's part of my rent. It's hell of a not free. It's one of the bonuses for me overpaying for rent. But I think it's a testament to what I do, and I've had machines in my house, and I used it all the time. I loved it. The convenience of having a treadmill in the house, or one of those sit up machines. Those are really nice. I like them. But yeah, pretty crazy stuff. Pretty crazy. And Dave's down to Mardi Gras for the week. Happy Mardi Gras to you, Dave. That's fabulous, man. Good stuff. That's really cool, man. People pulsing in through the network from all over. And again, thank you for your work on 𝗖𝐋𝐈𖖊. It's really great stuff, Dave. Really great stuff. I'm in debt to you, my friend. I would love nothing more than for this to materialize, not for me, but for others. I have a feeling about what this is going to materialize in for me, and I'm totally fine with those renderings. It will be well earned. One of the toughest things I've ever done in my investing career, and the verdict is still out. Rick seems to think I should enjoy these small milestones. Yeah, I don't know. I'm stuck in reality with getting through 2022 here with such anemic earnings. A few other things need to happen, in my opinion, for the company, and I believe that they do. I believe that they're casting a wide net, and they've garnered such an amazing interest. As some of the intangibles that I picked up from the call were just lovely, and you guys are going to want to stay tuned. The folks that follow 𝗖𝐋𝐈𖖊, and the folks that don't, obviously don't watch those videos, but there's a good contingent of the subscriber base that does to the channel, and they wait for those every week. I will be having my reaction video to the earnings, because they were really good. They were really good. I read the transcript. I always do. I read it first, and then I listen to it, because listening is a luxury. And I pick up different things when I read the transcript than I listen to it back. It was really quite good. Yeah. Growth does not equal profit, and some of these companies never will have profit. Yep, I agree. That is true. And if there was any learnings from the Hyliion, it was absolutely that. I knew what I was getting into when I got into it. You need to understand as well this earnings that were just rendered on the last call. They've been delayed a year on their rollout of their product. So in all fairness to Hyliion, they've taken a delay, and that happens. hmm I think it would be hard to say that with the backlog in the order book, all the things that I talk about on the Hyliion videos, Thomas mentioned, which I was very happy about. Jesus, I said that on my Hyliion videos. I doubt he watches me. I doubt it. I would say that there's no way that hell he does. Why would he? I interviewed a piece of cardboard with his face on it. But these are the things that I said they needed to do. They needed to talk about shareholder value, and that was the first time he had mentioned it. That was the first time he talked about solidifying the order book against reservation slots off the lines going forward, going into 2023, 2024 and beyond. That's just he said that's how it works in the trucking industry, which I really resonated with. I really appreciated that level of detail on his explanation. It was pretty awesome. You know what I mean? Mhm. Mhm. Sorry, you guys get a break from that for just a sec. I was having a little drink with my buddy. This is my brother, Maddie. Oh, make one, Matt. I'll watch you drink good. Oh, he will. He's probably over there now. And that's very cool. I'm cruising up to see if there's any questions in here. Absolutely. He says, Ryan also, he's throwing me a bone. Ryan also prints. I haven't been printing for a while. I'm printing right now in a capacity that you guys have no idea on. And it is my business dealings. It's doing good. Appreciate all your support there. Give away a lot of goods on the channel. The live stream is a really kind of a free opportunity to come in and hear my perspectives and philosophy on the markets. Some do pay for that access. They do so through the independentinvestorgroup.com. That's the independentinvestorgroup.com. We'll continue to roll that product out because a lot of people like the one-on-one. That's simple. You got to be astute. You got to pay attention. If you're going to hear my 60 minutes of live stream, like, Heffy, what the hell did this guy say? Come here, this independent guy's giving away the goods for free. Come here, Ethel, get in here. If you don't want that, right, go to the independentinvestorgroup.com. And they'll hook you up. A little bit of coaching, a little bit of tutorial, man, never hurt anybody. Little bit of life coaching, and some people need it. And we've done that for some people that needed it, and they've taken it and they've succeeded through it, right? It didn't cost them $500 either. The difference is made in its granular nature in the trenches. Uh-huh. Uh-huh. When I have the ability to sit across from somebody and really relate with them. Yeah, get that customizable piece that I talked about. Get that plan in place that really makes sense for the individual. It's like an article of clothing that they put on and they're like, this fits nicely. I like this. This is lovely. I like it. This is great. Gosh, Ryan's like a custom tailor. I like this. Good stuff, man. She hasn't been with me for a while anyway, for sure. Just got to the gym. Fantastic. It's great to see you. Hope all is well. Hope all is well out there in sunny California, man. Very cool stuff. Great to see you. Great to see you. Thank you so much for coming on. I was on my rant. I gave you a ninth inning shout out. I apologize for that. Come in a little bit earlier if you can. I know you're working so much. It's all good. And Eric Weaver's in the house, man. Going quite driving to get grandkids still listening. Fantastic. He's got the family obligations. He's got his priorities, that's for sure. Kyle's probably running the live stream on the other end there. Fantastic. Kathy sold at the bottom. Yeah, I'm not, I don't, that was of interest to me for sure, but I don't necessarily mean that that might not be presenting an opportunity. There was a huge purchase on the inside today. There was some insider selling with the company, but there was a huge upgrade and a huge buy, I believe, with the Merrill Lynch, I believe. or Morgan Stanley. Yeah, Palantir is a good buy here. I think, just shy of a 30 billion market cap. They're a good company. They're rooted in. They've got a lot of government contracts, man. We use them. So yeah, they're good. They're really quite good. It's good. They're number one conviction buy right now. I like Hyliion, obviously, but I'm already established, right? Thoughts on Kathy selling? Sure. When I came out with my ARK ETF videos, I think I saw a statistic there that Berkshire Hathaway is now outpacing the ARK KK. All that risk taking on to fall short of just buying Berkshire B. Ouch. Ouch. Nobody lasts forever. Nobody lasts forever in the stock market. She was the queen last year. Man, she just couldn't do anything wrong. Everybody was like, oh, here comes Kathy floating in on the cloud, for her interviews. She would be sitting Indian style, like floating and stuff. And everybody would be like, Kathy, how do you do that? And she's just like, I can see the future. Everybody believed her and stuff. It was awesome. Pay me 1% management fee to my ETF that's passively managed. Don't mean to talk trash, but holy smokeolies, make it easier than what it is, man, guys. It's not that hard. Because that cracked out is a different story with him. Every week is a different story. I mean, he's doing it for real. I'll be the only one to pick up on that. Most people will be like, God dang, Kevin, you're giving me whiplash, man. Last week you told me to do this, and this week you told me to do that, and next week I can anticipate that you're going to tell me to do something else, So I go figure. Live your life in a lot less of a pathetic way than trying to follow a YouTuber like that, man. It's you'd be so much happier. Good grief. Be your own best advocate of your program. And I think that's a good stopping point, guys. Really appreciate it. This was a good live stream. I wasn't sure. I wasn't sure what was going to be thrown down, but the goods were good tonight. They were good. There was a little bit of Heffy, a little bit of when I dip, you dip, we dip, right? A little bit of singing tonight. So a little bit of fun tonight, but keep it in a box. Keep it in perspective for you guys. All right. This is stock market investing. It is stock market investing 101, and it can be easy. Okay, I just don't want you to underestimate the power of stock market investing. Deploy those tried and true fundamentals to stock market investing that have been proven to work over the long term. Because in the short term, nothing makes sense in stock market investing, man. Keep your eyes on the horizon. Keep your discipline about you. Keep your perspective about you. And keep the ship pointed toward the horizon, guys. You'll be so much more happy that you did. And you'll be so happy when you get to that end point destination at some point in your future. Be well, guys. We'll catch you next Friday on the Independent Investor Channel live stream, fastest 60 minutes on YouTube.